I'll send it again. I don't know something.
Okay, I'll just start the discussion with what we were discussing in the FNO class. So can you all see my screen?
Yeah.
Okay, so you should be able to see the bank Nifty, and you should be able to see the S&P. Okay, let me put both next to each other. So essentially what we were looking at, of course, was some trade that we could do towards the budget, etc. So if you look at the Nifty and the Bank Nifty next to each other, you will see that on the right side we have the Nifty, on the left side we have the Bank Nifty. Now, just to put things in proper perspective, remember we were discussing this 3 days back. So essentially we were discussing it on this day, this is, let me zoom in. So we're discussing this on that red candle. Monday, Tuesday, Wednesday, these are the 3 candles that you should sort of keep out of your mind. So we're discussing it on this candle, and let me just make that white. Put another one here. And what we are saying is, if you looked at that, those on that day, clearly the Bank Nifty was in a downtrend at that time and had the support at the 50-day moving average plus some other short-term support around 18.5. And on the other hand, as far as the Nifty was concerned, at that time this was a sort of evening star formation with a hanging man in between, with very little chance that the market would go up. And there were two major events that were of concern. One is or of importance. One is, of course, the expiry, which is happening today, and the other one is the budget. So essentially the discussion was what trades could we do, and now that we were in the last week of expiry, it was very clear that the trades could be divided into 2 different groups. One is for this month's expiry, that is February expiry, and the other one looking at the March series. So if you're doing something for the budget, then it had to be the March contract, obviously, and if it was anything before the budget with a shorter term view, it would have been the Feb contract. So in terms of the Feb contract, clearly what was that market was probably not go up and would also not go down. Mostly the market would be sideways or range bound till the budget is out, and therefore not expecting much of a move on the Nifty or on the Bank Nifty for the next for this week. Essentially, so as we all know, the only way we can make money if we are talking about sideways move is we need to write options. So the question was which options to write. So if you look at the Bank Nifty here, what was suggested was writing the 19,500 call option. And if one were to take a little stronger risk, remember that white vertical line is where we were on that day. Even perhaps instead of 19.5, you could look at the 19,300 option. Sorry, the 19,300 strike. So I think on Friday. Yeah, I'll come to the values later. So your bulk, Sid was mentioning that IB snapshot from Sampath, right? Sid, that's the one you were mentioning. So in that there's a percentage probability which was really good, and that's what I think Sampath has written in terms of the 19,500 call. Now as you can see from this, I'll just bring up the Nifty chain. So if you look at the Bank Nifty chain, I'm not sure how clear, yeah, should be. So 19,500 right now is 2 rupees 80 paisa, and you can see that just yesterday it has dropped by 14 rupees, and I think it was like, I don't remember, Madhu might have the numbers. This was like 40 bucks or something like that. This was last when was this? Monday morning we had a session, no? Yeah. And just at open it already 10 bucks down. So I told them to go Tuesday morning. This was Tuesday. So Tuesday morning we had a FNO meet. And basically in terms of expiry, this is now 280. This would have expired. Worthless another 2 rupees 80. So there's 40 bucks, not 40, but 30 bucks or something. 750 bucks to be earned over 3 days. So just discussing, what we could have done. We were not in favor of writing any puts because it was a downtrend, and in case the market suddenly dropped, then the puts could be loss making for us. And similarly, on the Nifty side, we discussed writing a 9,000 call or the 9,200 call. And of course, if you look at the Nifty option that day, option pane in the 9,000 open interest, or let me just make an open interest here. So this time this has really 19,500. There was a 6 lakh open interest here on the 19,500 Bank Nifty. So very, very good resistance. It's actually just dropped a little. It was actually higher 3 days back. And then if we go to the Nifty, then you'll see that the 9,000 strike had 6.2 million, and you can see that yesterday it went down by minus, so it's almost 7 million. It was the highest. I mean, it is almost virtually guaranteed that you would make money just by writing that option, and right now it's 50 paisa, but I believe it was like 25 rupees or something like that. Yeah, 25 rupees just 3-4 days back, right? So just writing the option, I think this month was really, really profitable. Unfortunately, maybe we should have really looked at this earlier, but just reviewing what we discussed, and we had even discussed writing the 8,900 since the 9,000 didn't seem very attractive in terms of how much money we would get. So this was one of the discussions. The thing on the interactive brokers IB is that Sampath went and later discovered that Probability Lab, and also that just on clicking the quote, he had sent another mail. I'm not sure whether you all saw it. Let me see if I can bring it up. In which he put a quotation of the 19,500 put, sorry, the call, and yeah, can you see my screen with the quote details, everyone?
Yeah.
So if you look at this, I'm not sure exactly how to read this. First time I've seen it, but very, very interesting, because what it says here is, if you look at the right side where my cursor is, maximum loss 26 rupees. That was how much the price was. So 26 into 25, you were making 650 rupees, and the maximum loss was the full amount, the premium, and there was a 94% chance of that. Now I don't know what this 100% is here and what's the 94% chance. And on the left side, if you look at it, profit probability is 5.5%. Now we are looking at, the question is, are we looking at this from a writer's perspective, or are we looking at this from a holder's perspective, right? So I am assuming that from a holder's perspective, the profit probability is 5.5%, and from a holder's perspective, there's a 94% chance of losing money. And this is on the quote snapshot of, it's not a trade, so as you can see, it's quote details. I was really, first I thought this was a transaction, then I saw this was quote, and I said, wow, I mean, this is really, really very, very useful. So this is something from the IB page that Sampath sent. And just to go back to what we were discussing, so 26 rupees, this was on Tuesday morning, and 19,500, like I said, it was 2 rupees 80 paisa as you saw. So basically made 650 bucks. I mean, this was a cool, easy trade to have been able to do it in this week per lot. And well, you wrote more lots. And by the way, we calculated the percentage return on this transaction. It was about I think 120% annualized. It was a 1.5% return on profit over 4 days or something like that. Yeah. So any questions? No? Okay. So this was something we had discussed. Good trade. I think Sampath did this. All the guys in the FNO were supposed to do this transaction actually. Otherwise, really don't get a sense of how the whole trade works. A lot of these guys have paid a hell of a lot of attention to the theory, but they need to get some grounding on the actual trade side. Okay. So now coming to the overall market. So as you can see, the market's been clearly, it's been going up, but 9,000 is a big resistance, and the question is 9,000 breaks or doesn't break. And on the other hand, right now 8,500, 8,600 is, I think, a very, very good support. So the discussion that we were having was generally that since the market is expected to be bullish and the budget is supposed to be, all reform stuff, but then again, we're not sure how that will pan out. Essentially, with a bullish view, what are the positions we could look at? So one was just buy a call option. So ATM or OTM, of course, this will be the March series, right? And we can do this just even before the budget. So one of the discussions was let the time value come down as much as possible, and don't buy this till say Saturday morning, and then you can review whatever you want to do at that time. Other one was long futures, all right? So long Nifty futures at CMP. So you do this today or tomorrow or whenever with a protective put. Okay, and so protective put again, you want to do it at ATM or OTM is a question of risk management and all. And as I think one of the very nice things which was there in the reports that Balki sent yesterday is, let's see if this comes up. And I think this is also what Sid was referring to. This is the report from ICICI on what is expected in the budget. Okay, and we'll just come up. Okay, so there's a lot of details, but just trying to come because this was the only guys I found. Yeah. Okay. So I don't know if you can see this. I got to go down. Yeah. So can you see the chart? So you can see return on budget day over a time period over the last 10 years, and mostly it's been negative. All right. So mostly it's been negative. So apart from 1, 2, 3, 4, actually 50-50 I guess, 1, 2, 3, 4, 5 red days, all the others have been negative, and negative to a large extent actually. Minus 5.8, minus 4, minus 3.4, etc. But this is only for 1 day review, alright. Now if you go to that table on top, this is something that Balki has sent to all of us. I found this really interesting. Then you will see that over the 1 month period. So prior to the budget, this is something where and your time is over. Post budget, if you look at it, then interesting stuff in terms of how different sectors have panned out. Unfortunately, there's no one single overall table. So if you look at the Sensex, mostly positive, right? So except for 2008, you take that because that was also the crash year and all. I think this would be an outlier. You take that out over a 1 month period. I would say this is on the region of 2 to 5%. Would you say? Do you agree on the Sensex?
Yes.
Yeah. So
Yeah.
if we look at this and we say the budget could be, or sorry, the Sensex could be up by 2 to 5%, and I think we can look at the BankX also. So you're seeing 4%, 10% minus, this minus 23%. Again, this as an outlier, leave that. Then there's minus 14.8%. Maybe this is more around 5 to 6% or something. Maybe somebody can do the math on this quickly and get the average. So 2 to 5% on the Sensex upside, on the bank side maybe 5 to 8% on the upside. So I think basically we've got this sort of bullish bias or 1 month. Remember this is 1 month post budget, and then question is what can we do about it. So you could do this, and if you say there's a headroom of up say 5% up, and we're talking about the the Nifty basically being at 8,750, so into 1.05 makes it the Nifty at 9,187, so 9,200. So more or less this is actually what we discussed without having the calculations at the back, and with a 9,200 call, right? Okay, so the 9,200 call, basically you're going to write that, and that would sort of pay for, partly pay at least for the cost of the protective put. So if we were to put some numbers on this, then let's do that. Somebody can do, right? So this is Feb, we need March. So if you look at the March, then let's say you go with the protective put of even 8,700. You're talking about 325 rupees. No, sorry. LTP. So 145 rupees. So this is more or less where it was. 145 rupees is the 8,700 put. All right. Or you can look at the money 8,750 at 166. I'll just go with 87 at 145, and the 92 call is 54 rupees. As a matter of fact, it dropped by 13 rupees, something that we had said do it that time itself. So 160, where did that go? 160, 145 on the 8,700 and 54 on the 9,200. So this is 145 rupees and this is 54 rupees. So this is plus, that is minus, right? So, and you're going long on the futures at the current market price. Okay, so this is a strategy that you could look at doing for the, maybe just take out this space, for the budget, and you could basically perhaps do this equivalent strategy for the Bank Nifty also. So in terms of juggling your mind, I'll leave it to you to figure that out, and we can discuss it tomorrow evening perhaps. And then you could also do the bullish spread. In that, essentially we would be going long on say 8,800 call, and short on the 9,200 call. So if you actually look at the numbers, so the 9,200 call will be 54 minus, and the 8,800 call is 188 rupees. So actually that will be minus, sorry, because you're paying for it. And this will be plus because you're earning it. So essentially your cost will be 134 rupees, 134 into 25, 3,350. You're effectively long on the Nifty, and you could just hold this for the whole of March, or manage the legs depending on how the market pans out. These are trades you could actually look at.
Musa, that is for the put 188.
Sorry, say again.
That you put 188. That is for 8,800 put.
Oh, sorry. Made the 8,800 call is 208, right?
Yeah.
Okay, sorry. All right. Yeah, so broadly, for budget 215. Any questions? And as an exercise, I think find the equivalent setups for Bank Nifty. What would be those levels? So like I said, I think if you go to this table, the Bank Nifty has a different expectation that is there, and if that pans out, then the levels of course will be different. Broadly, like I said, around 5 to 8%. I think if somebody did actually all of us should do this. You just took the actual numbers here and did the actual maths and calculations. I would suggest taking out this outlier number from your calculation, but calculate everything else and get a sense of what we can expect. Then we'll probably have some really, really good trades that we could perhaps do on Saturday morning. Yeah? Okay. Any comments?
Can you hear me?
Yeah.
The bull spread, the max profit is 6.75 and the max loss is 3.25.
So bull spread, max profit is
6.75
6175
and loss is 3825. I took it at 55.
Sorry, come again. You took it?
The call I took it as 55, not 54. So
Okay, that's fine. All right. So you definitely have a situation here where we are a risk reward ratio not too great, but I would say it's fine. So you're talking about 6175 divided by 3825. So 1.6 is the risk reward ratio, which is good enough. And remember, I mean, this is if you're just going to hold on till expiry and all that stuff. But if you're going to actively manage it and let's say square off the short 9,200 call, depending on how the market moves, then you slightly increase your profits, I would say, not indefinitely. So maybe you'll have a better profile. But that depends on how your risk management is. And of course, if you've got a setup like Interactive Broker, there's actually a lot of if-then conditionalities you could have that you could write into that order and improve the risk-reward ratio and increase the profit, I believe. Right? Okay, good. Any other comments?
Still, close to 15% from the market.
Regarding writing Sorry, Sid, go ahead.
No, I'm just saying, if you look at the margin money you put, the max reward is 15, 16%.
So on the margin money, it will be around 15-16% return. Okay, that's very good. That's very good. Okay.
Yeah, I wanted to comment on the margin money. The margins are going to go up from today. I think today, tomorrow will be probably the highest. So if you want to do something, it is better to do it probably today.
Okay, but keep that in mind that if the margin money goes up, that higher margin will be required for existing positions also.
Okay.
You can't have a system where you have one set of, I mean, you can have a system that's going to just create a lot of issues. I am allowed 30,000 margin, but when you trade tomorrow, you have to do 50,000 margin. What if the volatility goes up? Then the 30,000 margin is not enough, right? I mean, essentially the margin money issue is because the exchange anticipates higher volatility. So you can't allow something which has not enough margin to be in the system then. So basically all the people who have done a trade today will be asked to increase their margin tomorrow.
For writers.
Yeah, of course, for writers only. So Sid, your 15% is based on existing margin, right?
That's on existing margin.
Yeah, so even if like Balki is saying, I'm not sure if there's a number out about how much margin will be increased, but even worst case scenario, I would say worst margin is doubled. 15% instead of 15%, we're still talking about 7.5%, which is, I think, I mean, by any standard, very good. Okay. Any other questions, comments before we look at some other stuff?
So if I want to play, not on options but on futures or spot. So from this chart, it looks like banks are the ones which generally we give good move.
Yeah, from this table you're saying.
Yeah.
Yeah, I think I mean the data is obvious, right? So yeah, it's possible. I mean, we just have to look at what the data says.
Yeah, but okay, I'm asking that because banks have not moved at all last 1 week after the results.
Yes,
They have come down after results and then they have just.
I think as far as the banks are concerned, I mean there are several issues. One is the higher NPAs, the higher provisioning, and the worry about, since the economy is not really recovering, whether the banks will do well moving forward. So these are issues which are outside the bank's control, obviously. And I think what the market will be looking as far as the banks are concerned is, are there any announcement which really could alleviate the stress the banks have, as in economic growth stimulation or some boost to lending, good quality lending. Maybe like one of the expectations is they'll increase the limit on the housing interest for self-occupied houses, so that good credit quality, good credit offtake happens, backed by good payment, and overall in the banking system the stressed asset things comes down. So if that happens, then I think the banks would do well, but there's nothing more than that, in my opinion, that the government can really do. One of the other things that was mentioned, I think this, let me get this if I can. Yeah, the CARE PDF. Let me just get that. So all these PDFs have been sent to you by Balki. Right, so just have a look. So this one is a really long one, but it actually is not as long as it looks. Where is that? Yeah.
Also, I sent it again to the group, but it looks like it has not gone.
Yeah, fine. No problems. Okay, some issue I think.
You can forward it later.
No, I think there must be some attachment issue with Yahoo groups. Uh, where did I read this? I went through this whole thing yesterday. Okay, this will take too much time to go through it right now. Okay, BFSI sector. All right. Ah, okay, so just pay attention to this, right? Resolution of of asset quality issues in banks. So gross NPAs of public sector banks is over 4%, and restructured advances around 7% of advances around. So basically what they're saying is, because things are not performing well, the NPAs are going higher and, changing in how they're giving the money out, etc. Now the expectation is that an agency for resolution of non-performing accounts on an industry basis, not on a individual bank basis. Now, if something like this happens, right, then this view totally positive for the banking sector. So lower provisioning means less stress on the banks, higher EPS, and improvements in profitability. So this is like your what stressed asset reconstruction (ARC) companies, where the reconstruction stressed assets are sold off. They're not on the bank's balance sheet. But this is a little different, because one of the things that's being understood is that a lot of this problem is because of the lack of growth itself. And if that happens, then all these things will automatically get taken care of, right? So this is one, and the other thing is this line, higher autonomy for PSB. There was also that conclave of all the chairmen and chairpersons, which also said something like this. And if this is true, then again, good for the banking sector. So I think these are the things to sort of listen for in the budget speech on Saturday. This document by CARE, I would suggest everybody reads it. It says 42 pages, but most of it is just blank spaces like this, and each thing has a table. Just that's all. So go through it, and you'll get a sense of really uh, what is expected on each of the sectors. So I think this is one thing one good document to really keep in mind. Okay, so that's overall on the banking side. So coming back to this table, I think yeah, go by this and position yourself for a bank trade on Saturday. Really be good. Any other views?
When I went to the multiple of those reports, I found that different reports have given different expectations on the budget. For example, whatever you said now on that CARE report, it is not there in the other reports.
Yeah, actually, yeah. I mean, that's definitely a good point. Many of the reports have a lot of information which is unique to each. They are not overlapping at all. So I think I would really suggest that we go through all these reports. Maybe if not, I don't think we'll go through it today, but I would strongly encourage everyone to go through it before tomorrow afternoon's review, because then I think we'll have a much better basis on which to discuss some stuff. Okay, while I bring up something else, anybody has anything else to say? Any other?
Yeah, I found that the Kotak report has also given what is the issue, what is the industry wish list, and whether they expect that to be taken care in the budget or not. If it is not,
Okay.
if it is yes or no, then why they are thinking so, and what will be the effect on that, on the bank. So like that they are given for each sector.
Okay, I haven't seen the Kotak report, so I'll have a look at it. Good, great. Any other views?
No.
Okay. Anyone else? 1 second. Okay. So one of the things I want to draw attention to, broad. Okay, 1 second. This one is from K.R. Choksi, again sent by Balki. Just read it, it's not very long, just 4 pages, and it has all this. And what's really nice about I found was, at least the ones I went through, this was the only one which had numbers like this, you know. Of course, all of them have, but this was like in a nicely rounded number, I mean like in consolidated number, sorry, in terms of what each one is doing and how much this money could go. And there's another one which has the Sher Khan, yeah. So the Sher Khan thing had a completely different view on GDP and how GDP is equal to consumption plus private investment plus government expenditure plus net exports. Nice one, really, and talked about how much India has saved. So India saves 55 to 60 billion dollars in crude oil imports because of the falling crude oil prices, and then also the India saves 70,000 crore on the fuel subsidy bill alone. So this is because of the deregulation, and basically what they are saying is that because of this, this is the sort of not extra money. The fact that uh, this money could be used for stimulating the economy because private investment is really low. Like they say right here, important of the budget stems from the fact that economic recovery and corporate results, were weak. And essentially what Sher Khan is saying is the government has to use this 1.2 to 1.3 trillion in fuel savings that they have to perhaps use that for stimulating the economy and doing public expenditure. And the public expenditure is where's Bobby? Is Bobby here? So Bobby will be should be here to is in the Make of India thing. So all your Bharat Electronics, L&T, yeah. All right. So Bharat Electronics, L&T, Bharat Forge, all this Make in India is big time stuff. And then you have where is that? Social infrastructure. So low cost housing, sanitation, clean water, Canfin Homes, LIC, cement, and there is your sanitation and water theme through VA Tech Bag, which we saw in the last session in the charts, and we saw how it had gone up. I don't know about the Supreme Industries, who these guys are. We need to maybe have a look at that. And then there is GST and urban consumption, and then they're talking about Thomas Cook, Cox King, KDDL, not sure what that is. These are not recommendations, also, of course, they are just broad pointers as to who might benefit. And I think they completely missed out something. Something on defense. Okay, so I'm not sure where that is. Then, so let's close that. Okay, so coming back to Choksi report, the smart cities. There's by the way, today's business standards, Pragati Maidan 3-day conference on smart cities is being held. And there is one number that I want to really highlight here. Let me see if I can find it. Okay, so this is something that really caught my attention. Okay, A roadmap for double-digit GDP growth over the next 4 or 5 years is an obvious expectation from the budget proposals. Okay, so that means double-digit. They're talking about 10% a year. I'm not so optimistic. All right. I would say even if we go from our 4.5% to 8-9%, that would be great. But I think the real big thing on this, and I really want to highlight this, right? Okay, let me see if I can. Is okay, really bad. Doesn't work properly. This message here, right? Producing faster growth and growing the size of the economy from $2 trillion to $20 trillion. So I'm not sure if this is a typo, but they're talking about a 10-fold increase in the GDP in the next decade. This is what Choksi is saying, right? I don't know whether, I mean, I find this difficult to accept emotionally, but technically, I mean, mathematically it could just be possible. But if you're talking about growing the economy 10x in the next 10 years, all right, at a very simple thing of, you're talking about, I don't know how that works. 10x over 10 years, you're talking about 1000%, right? And that divided by 10 years is like, how do you do this? If you do it by 100% a year, you've got, my mind is not working, so somebody help me out. 248 in 3 years. So if you double every 3 years, you get 248. Yeah. So you're talking about doubling the economy every about 3.5 years. I don't know how that is possible. So I'm not sure about this number, but so I'm not sure how. I'd really love to know what the background to this number is. But let's say this is even partly true, and even if the economy grows from 2 to 10 trillion in the next decade, which seems to me to be a lot more reasonable, 5x, not 10x. You're essentially talking about overall the market going up by 5x from this time. So if we go to the KRC report saying 2T to 20T, right, 10x India's by 2025. All right, so very simple. Nifty, right, so essentially say at 9,000 could be at 10x growth, 90,000. Right, so even if earnings increase by the same rate, right? So yeah, so Surya is saying year on year 20% growth. That's not possible in my opinion. It's just not. So this is some crazy number. So even if we don't, we discount for this and we say, not 10x growth, but second, sorry. Okay, even if we say we need 5x growth, this would be 45,000, which is fine with me, right? And if you just do the derivative side on that, you're going to make a lot of money. So this was the other thing that really caught my attention about this level of growth that is being expected by the KRC Choksi fellows, right? Yeah, then okay, so coming back to this 100 smart cities and things like that, then essentially it will come down to a lot of infrastructure generation that has to be done. And if it comes to infrastructure, the bottom line is quite clear. The bottom line is that infrastructure is a function of government expenditure. Of course, private expenditure comes later, but infrastructure, I think, will be the key focus on the budget if all these things are to be delivered. There is of course the land acquisition problem, but if that is taken care of with the BJP having changed the laws, as you know, the UPA saying that's not right, and Anna Hazare is sitting in Delhi with one big Andolan that is going on. We'll have to see how that goes, but this is all going towards infra, and then of course the cost of government's borrowing set to come down. That's because RBI is reducing the interest rate, and RBI monetary policy is expected to align its measures to the above mentioned aspects. We expect the interest rate to come down by at least 25% per quarter over the next 8 quarters. So that's like a 2% increase in the overall interest rate in the economy, which is huge. It sounds less, but it is huge, and the impact of that is also, just to sidetrack a bit, talking about the sort of new mentorship program, investing or trading in bonds and how one could benefit from that. So that is something we'll have to start discussing a lot more seriously. First of all, we'll have to get data on it. A 2% increase in interest rate over the next 2 years is a huge opportunity to invest in bonds and debentures, and to make quite a lot of money on capital appreciation, right? So that's the KRC, and he says that he expects the Sensex to reach over the next 2 to 3 years. All right, so this is 45-50,000 on the Sensex over the next 2 to 3 years, not over the next 10 years. So essentially, easily a 50% growth from where it is. And then KRC gives a whole list of sectors which he expects to benefit. Sorry. A lot of things overlap. For example, Swachh Bharat is sanitary ware and ceramics, but in 100 cities also there is sanitary ware and ceramics and all. So this is a good one, which I think covers things generally, but you should start looking at it as basically all the sectors. There's nothing which is not there. And maybe what's not mentioned is FMCG and pharma and maybe 1 or 2 small handful things, but everything else is there. Right. What's interesting is that Choksi says that unable to put recommendations, put names, but every other company, every other report has got something which has clearly mentioned which stocks could benefit. Of course, they have not put levels on it. Right. Okay. Madhu has sent the Kotak report. Let me just bring that up. So, okay. Sher Khan, nice overview of
Yeah, Madhu, that was the report I was referring to. It was there in my mail also. Yeah.
Yeah, I have sent it to you all. We can just review that, because he has made a industry wise.
Correct. That's what I was saying. Yes.
Review. Yeah, it's quite good.
All right. So
I think New Science Feed also must have got it by now.
yeah, I'll just bring it up 1 second. Okay, can you see the Kotak report?
Yeah.
Okay, so what were you saying?
He has reviewed industry wise.
Okay.
And it's a quite industry wise general description. So
Okay.
I think sector wise, not in the sector wise.
Yeah. So positive, basically banking, capital goods, cement, construction, information technology, hotels, media, metals, oil and gas, paints, and power. All right. And then okay. Probably we'll need to go through this in a little detail. It's quite long.
Yeah, there is sector wise reports also.
Mm.
So that is also quite long.
Okay. Sector wise.
Yeah, Mosa, if you go to page 11.
Okay, just going there also.
Yeah, the sector wise report starts from page 11.
He gives the key expectations of the budget.
This is a table. Oh, page 11 of, okay. Yeah,
Page 11.
Yeah, this one.
yeah, okay, got it.
It starts from here.
Okay.
Yeah, if you go one more down. One more down. See, here he gives a table which is just
Yeah, for each sector is giving a table.
yeah,
Yeah.
the table says, what is the expectation, whether industry wish list and our expectation and rational for expectation.
Yeah, yeah. Okay, I think I'll go through this today later. Done. I'll go through this. But yeah, I think, I mean, just ask that question again, Balki, what were you asking?
Okay, well, no, what I was saying is that, at the moment we can't take a call on what should be our portfolio after the budget. So after the budget only we have to decide.
Yeah, see, I mean, the thing is, as far as taking a call is or a view is concerned, then broadly, I think it's a question of one should know what one is looking for, basically, and then take a view based on that. So if one has any what, like you said, existing positions, then I think broadly with the data that we have seen, we just have to wait. But on specific things, I think if we spend maybe today, tomorrow going through all these reports in detail and making a list of individual stocks that could really do well, and wait, and as we listen to the budget, this could be stocks that you could one could actually get into on Saturday itself, at least from a trading perspective, if not from a long-term investment perspective. Because my expectation is, all said and done, at some point we haven't had a correction, which is a meaningful correction in the last 6-8 months, and I would wait for that to happen from a long-term investment perspective. But from a trading perspective, one could easily, I think, find a list of stocks that could move on Saturday or next week, and get ready with that list, right? Okay. Yeah, so this is another report sent by Bobby about market tends to do on an average 2% better. Yeah, so some more data, 1 month, 2 month, 3 month expectation is also there. So this is between 1999 and 2000, all right. So where did it go? Yeah, all right. So over a 3-month period, if you look at it, then things look very healthy actually. If you look at this, and in conjunction with ICICI Direct, which had only for 1 month, 1 month plus minus. This is 1 month, 2 months, 3 month post-budget returns, and this is from the period 1990 to 2014. So on an average, this is looking really good. The highest looks like infrastructure. Okay, banks and infrastructure. So banks, infrastructure, PSU banks, and metals are the ones which seem to have the biggest 3-month returns. So again, going back to the bank nifty or the PSU bank, individual stocks and infrastructure stocks, I think that's where one should really be focused on. And I think this time the budget also is, sorry, the defense sector is also one thing to something to focus on. Yeah. So I think we've more or less, this has been a really, I think, good session in terms of focusing down. So from an investor slash trader's perspective, I think, if you look at it, this is the link. Let me just put that here. 1, 2, 3-month perspectives. (1999 to 2014 data). So remember that 1999 to 2014 data means that the dot-com bust would have been factored into this, and so the 2008 crash have been factored into this. And in this, we are clearly looking at banks, infra, and metals. Right? So it ties in very well with, I think, where Modi wants his stuff to happen, and his focus on various places. So I would say, if we are really interested, let's find the stocks that we could really do something, work on from a trading perspective on Saturday next week, and get in. All right? Okay. Any questions? So this is a good link. Thanks, Bobby, for sending it. Any other questions, ideas, thoughts? Will we stop here for today?
Okay.
Right. If there's anything, let's discuss. No problem.
Balki sir, you want to discuss anything else?
What? Okay, done, I think. So fine. Let's stop here. And Sid, are you there? Any comments to add from the other side of the world? Surya?
No, nothing else to add.
Okay, fine, done. Are you planning to do anything on Saturday, trading wise?
Comments.
Or is,
As of now, I am attend Musa.
sorry, I didn't get you.
As of now, I am planning to attend on Saturday.
Okay, fine, done. No. What I'm asking all of us is, if you're looking at any specific trades that you're planning to do on Saturday, not just what's the budget. Because if we are, then I think there's some work that we all need to do today, tomorrow, and get some specific stocks that you want to put on your watch list and be prepared for on Saturday from the sectors that we discussed today. Otherwise, we'll be just going all over the place, looking at this, that. So to be prepared in terms of some actual trading opportunities. Could be intraday, could be 3-4 days, but I think those could be expected. And if of course the budget is bad, then market will go down, and that's another different set of opportunities, a shorting opportunity. All right. Okay, great. So tomorrow, I don't know, we've done this much. I don't think there'll be a lot more coming out. What do we want to do tomorrow? Do we want to have the session from 3, or do we want to shorten it or not have it? What are the ideas?
Then I think as part of it, probably we can touch base this.
Yeah. Yeah, we can discuss everything in the IMR itself, Musa.
Fine. I mean, I'm fine. So we shall not have the afternoon session tomorrow then?
I don't know. Balki sir, what do you want? I mean, I'm okay to have the session also, but it will become double, no? Because IMR also, I'm sure, will discuss the same thing.
Okay.
I'll
Go ahead, Sid.
I can't attend both, I think, because of the timing.
Sid, we can't hear you, huh?
No, I said I'll probably not be able to attend both because of the timing.
Okay.
Oh, yeah. Good.
You'll be getting up 3 in the morning or something.
Okay, but you can always watch the recording, Sid, if it's IMR.
No, IMR I think you can attend. You won't be able to attend the earlier sessions, right?
No,
Yeah,
I am.
Sorry, can you hear me?
Balki sir, you are not there, what?
No, I am here. I was on mute. Now, what I was saying is, if we can spend time on going through these reports and probably, identify few stocks And then, we can have a longer discussion during IMR where we can give the summary of the.
Okay, fine.
Okay.
That is one option. But I don't know whether many other people will attend tomorrow. We are planning to attend that tomorrow's 3 o'clock session. I don't know.
No, this is about just two, 3 people. It's okay.
I can.
Yeah, maybe then you should ask them to also to go through these documents and join the.
We'll do that. We'll do that.
IMR.
Okay, so fine.
Yeah. Anyway, you can decide what is the best.
So fine, no, let's decide. I mean, I don't think there's much more than this. Whatever will be out in the newspapers will be in the next, today, tomorrow's paper. So we will not have the session tomorrow as planned. We'll just do a longer IMR. And in the meantime, I think all of us just go through this entire list of these reports that Balki and Madhu have sent out and these links, and make a list of specific stocks that you might be interested in, and we'll cover that in the IMR as best as we can. And maybe the IMR will go on a little longer, and we'll start at 7:30,
IMR
at 11 or something, maybe 12 or whatever.
No, Doctor, probably IMR can be the indices and those specific, reviewing those specific stuff.
Yeah, we can do that. Sure, we can do that.
You can start IMR early.
Yeah, we can do. We can do that.
Oh, okay. Sorry. Yeah.
No, we can do that because if it gets late, then I have a 6:30 morning session on Saturday. Actually, that's a good idea. Sid, what's the earliest that works for you India time tomorrow?
He will not join for the IMR anyway.
No, he's joining for the IMR, no?
Because yesterday, it is way beyond our normal limits. So I just want to check that as a checkpoint for each of those stages.
Yeah, so generally we should see what is the Nifty P in March, April, May, right? Because the budget is
He
always
has given those dates, right? In that ICICI day, right? He has given those dates, right?
Yeah.
Budget dates.
Okay, I'll look at it, yeah.
Yeah, sure. Thanks, Valki. Thanks, Maswati.
All right, welcome. The thing about I think the the P ratios that is being talked about, and I think 1 second. So what Surya is basically saying is that on the budget day, what is the P ratio, and on the basis of that, maybe make a more informed decision. All correct. Having said that, I think it was Sid or who mentioned about which guys were looking at India being bought for growth, right? Not for value. Earlier in the session.
Yeah, Morgan Stanley or somebody.
JP Morgan. Thanks, Sid. All right. So the other thing, I don't know where I saw that report on yesterday's paper, is that India is the highest overweight market on the, I think, MCSI index, etc. And when you talk about growth, then you can't, it's very, very, very unusual or very rare to have a combination of growth potential at a cheap valuation. So we all know about DARP investing, right? Growth at a reasonable rate, at a reasonable value, but at a cheap value, it's not going to happen. So if you look at it from that perspective, and if you're expecting growth to happen, then I would say looking at the P ratio may not be the best idea, even though I'm sure there's value to it and that exercise should be done. So essentially, if you are aligned with this growth view for India, then keep, even though P is expensive, remember that P tends to be expensive during the growth phase. If and when a sort of correction comes, that is when I think the value will appear, and that will be a really, really good time to get into the market from a long-term investment perspective. So keep two things in mind. As far as the international view is concerned, I think globally, or the global fund managers seem to be, at least according to the news, overweight on India in spite of the higher valuations, and the reason for that is that they're expecting higher growth. And again, going back to the KR Choksi thing, if this 10x growth happens, then you're not going to get this 10x, 10% GDP growth or 8% GDP growth. We'll be one of the fastest growing, we'll be growing faster than China. And that's something that was in the newspapers, I think, 2-3 weeks back. And if that happens, then things will be very, very different. And we could see a big, massive bull run before another big correction happens, like it has happened in China over the last 3-4 years. So timing is obviously difficult, but just keep this sort of dilemma in mind in terms of valuations on the PE side and growth on the other side, right? But all said and done, yes, if we can look at these dates, 3rd Feb or Feb 2004, etc., as given in this table, and get a PE basis around that. Should take not more than 15 minutes to do that, since we all have the PE chart, and get a sense, right? So obviously PE now on the Nifty is around 23, which is not cheap, and definitely I would say slightly expensive. The thing is, anticipating growth, is it justified or not, right? So Balki, are you going to do some work on this?
I will see. If it is not a lot of work, I should be able to do it.
No, it's not. I mean, if you have the PE chart with you, I think it'll take a maximum half an hour. It should take about maybe just 15 minutes in Feb 2004, July 2004. You don't have to get specific dates, right? Just in what range it is on these 10 days, and we know what it is now, and then we can have a discussion on that tomorrow. Okay, that's a good suggestion. All right, good. We'll look at that data. Okay.
No, but you must be already having the other PEs, sir, for the previous years. Balki sir?
No, I have the PE chart. That's not a problem.
That's not a problem. So you'll have to add only 1 or 2 months, that's all. No?
No, I have the latest month. I just put it in a table, that's all.
Okay.
Pick up and put it in a table.
Okay, sir.
Okay.
Yeah.
Okay, great.
Okay.
Thank you all. See you tomorrow, maybe at 6:30. Otherwise at 7:30. I'll send out the links. Yeah. Okay. Bye. Have a good day.
Thank you.